Happy New Year, everyone. Happy 2024, and welcome to the first Steady Wealth podcast for the year 2024. One of the things that I like to do as an investor and trader, as an advisor to our clients, as a portfolio manager, is to look at the year ahead through the lens of resolutions, really more about sticking to rules and having a set parameters of how we can get better and improve as investors and traders. Remember, the most important thing and the most difficult thing in this profession, whether that is being done professionally or at home as a private retail investor, really is how well can we stick to a set of rules. And it's difficult to do, to say the very least, which is exactly why I like to have these resolutions. So what I'd like to do in today's episode is go through, I think it's 5 or actually no, it's more like 10 that I came up with that I really would like to focus on this year in 2024. Now, there are some that I have on my list every year because there's always room for improvement for sure. Let's just start with one of them. And of course, this depends a little bit whether you are a professional investor. No, we have a lot of portfolio managers and hedge fund traders listening to this podcast, and of course, a lot of retail investors as well. So it depends a little bit on your situation. But to me, when I look at the year ahead, we always start with a base case that if someone's going to be a self-directed investor and trader, that there has to be a portfolio somewhere that serves as the bedrock of allocation. And then we can trade on the side, or we can trade around that portfolio, but there's got to be some sort of an asset allocation. And so when we look at 2024, for me, I want to make sure that I personally and for our clients really focus on keeping that core portfolio as diversified and balanced as possible, because I can it if my core allocation is balanced and diversified, it serves as a weight, kind of like at the bottom of a sailboat, right? That kind of keeps it from tipping over. And then I can still trade on the sides. If the portfolio goes a bit too far to the right or to the left, I can then still trade and get the boat back in balance. But the better my core allocation is, more imbalanced and diversified, the less I have to go out on a limb and take on too much risk in my trading portfolio, if that makes sense. So I think having a diversified mix of assets and adjusting those allocations throughout the year, not too actively, but when it makes sense, I think is going to be really important once again, as it always is. But I think in 2024, we're going to have a more dynamic market again. 2023, we had some central bank interference and backstopping of some liquidity injections that kind of kept things from getting too far out of hand. But I think 2024 is going to be more dynamic. The second part is also one I think this is just generally a life thing, but I want to continue to be open-minded for learning new things. I've done this now for 25 years, and I can tell you there's a ton more that I can and must learn as it relates to the markets. I think staying committed to being informed about new trends, new strategies, risk management strategies, which is really the third point I'll bring up, learning more about economic indicators, dedicating time each week, each month to reading up on new types of research. I think all that kind of stuff is really important. Getting ourselves to more webinars and seminars. I think, again, one can never learn enough about the market. The third point, risk management, is really summarizes everything else that I have here in terms of the things I want to focus on for next year, 2024, and it's risk management. I want to make it a priority once again this year to constantly reassess our risk tolerance and update our risk management strategies. I want to consider using stop losses when it makes sense. That might be more on the trading side, but also on the investing side, stop losses based on time and maybe also on VAR, volatility as well. So having clear risk management guidelines is going to keep us out of a lot of trouble. It tends to do that any given year, and it's just one way to not blow up. In fact, it's the only way not to blow up a portfolio. And one of the things that I always see is people coming to us, whether it's on the Study Trader or at Blue Model Advisors, and they think there's some sort of a magical unicorn, some secret lotion that we use. But really what we're trying to do is keep us from doing really silly things. Some of those things might be buying at the absolute highs or selling at the very bottom. And or holding, if it's a trading position, holding a trade through an earnings support, a pure trade. Things like that can really cause damage to your portfolio. We want to make sure we avoid that. So risk management above everything is really something we want to focus on. The fourth thing is setting clear investment goals. I think having defined specific and achievable goals for the year. Now, I will say this can become somewhat arbitrary. So if we say, listen, I'd like to make 10% over the course of a year, that's a difficult thing to make. But I think what one can do is say, listen, I would like to have less volatility in my portfolio. I would like to be able to track a certain index. I would like to be able to track a certain factor exposure. Let's say tracking growth stocks or tracking emerging markets or tracking dividend paying stocks or tracking fixed income, whatever, but they have to be achievable. And I think some of it could also even be saving for a new milestone, whether that's retirement or a major purchase. It doesn't have to be related to the markets, just saving more could be another thing. So I think having specific clear investment goals for us, the investment goal really tends to be more about the lower volatility than chart chasing. I think that's typically a smart thing to do, at least as far as we're concerned. And as we're heading into 2024, we still have yields, at least here in the US markets, that are rather attractive in the fixed income markets. So if we can get 4.5%, 5% in fixed income markets, we can really build a nice base for any given portfolio and then add stuff on top of that, whether that's with options or other derivatives or such as structured products or allocating to equities in some shape or form or other things that can be done. Investment goals are very important. I want to continue to review and learn from the past. So some of the things that I have to look back at 2023 and did not well was really not being nimble enough given some of the dynamic things that happened last year, but that also suppressed volatility. I want to make sure I learn from that. One of the things that specifically to me, I underestimated in 2023 was essentially the bailouts, the liquidity injections, the backstopping of the system that took place with the regional banking problems we had in the spring. I, and quite frankly, many other portfolio managers I speak with, did not see the profound consequences that had and still has, and ultimately led to even further risk taking into the year end, albeit there's plenty of seasonal tailwinds, so that may not have been needed. But it kept us from going into a tailspin and seeing more volatility. And I want to continue to watch it very closely and read, and I do make this a priority, but even more closely, what's going on, what are the central banks doing, and we have to go beyond the central banks, the Treasury Department, very important to understand what they're doing. So we want to make sure that we understand and watch very closely what's happening. That's something I did not do well enough at 23, and I'd like to improve on myself. The next thing is a bit more on the personal finance side, but I think everyone should have an emergency fund, which is maybe not what it sounds like, but let's go with the obvious because there's two types of it. When I think of an emergency fund, I think of something from a portfolio manager's perspective. I think of something where I can access liquidity in my investment. So in other words, if I have readily available cash that can provide me peace of mind during turbulent market conditions or unforeseen personal emergencies, again, those are two different things. Let's talk about the portfolio stuff first. I want to make sure I have some cash. An emergency fund, what that cash amount is, can be arbitrary. Everyone's got a different situation. So let's say out of a portfolio of $100,000, just to make it a simple number, maybe it's 5%. That's a cash cushion, or at least 5% of something that's very easily liquidated with low volatility. Maybe it's T-bills, maybe it's money market paper that tends to have, and there are exceptions, of course, low volatility. And the reason we want to do that is because if turbulence hits, we want to make sure we have a part of our portfolio that we can access. We can either liquidate very quickly or we can buy protection from. So if I have 5% in cash and things are getting crazy or I'm noting something, maybe if I'm aggressive enough, I want to go buy some protection, some puts or put spreads if volatility is not too high, so on and so forth. The other thing for an emergency fund from a portfolio manager perspective would be, what if there's an opportunity that comes along that I just cannot pass up, but I also don't want to liquidate most of my or some of my holdings. This happens all the time. This happens to me at least once a year, maybe twice or three times, more than I care to admit. And again, let's assume we're in a situation, everything's going well, the portfolio's doing well, but all of a sudden a new opportunity comes along, and it's so darn good but I have no cash to invest because I'm fully invested. I want to make sure I have some money aside so I can invest in that. And then the third way of using an emergency fund is really just for sort of personal purposes, right? Those are on a personal finance side. Having an emergency fund, what if, God forbid I get hit by the bus, or whatever happens, you want to make sure there's an emergency fund. So that's more in the personal finance area. I don't touch that too much here, but certainly something to consider as well. Staying disciplined during market volatility. I think I want to commit to maintain discipline during periods of market volatility as it relates to taking advantage of weakness, but also if I sense volatility coming, and of course that is the more difficult part, I want to be committed to maybe not being sort of fully risk on. So I want to avoid making impulse decisions based on short-term fluctuations. Volatility tends to bring out the animal spirits. We can get scared. We can also get very aggressive. But if we stick to our decision making and not get too emotional when volatility hits, because volatility can tear apart the strongest of investment goals of trading and investing plans, because it changes our psyche. Certain TV stations, every time volatility hits, have a 6 p.m. special just to add more fuel to the fire. That all happens. That's very normal. It happens every time. It's always going to happen. Human emotions and the way we are as human beings has not changed. It never will change. It's one thing that's constant, despite all the technology in the markets these days. So we want to make sure that we stick to a disciplined plan when market volatility hits. Another thing is technology. I think, and that I have to say, we continue to do well. We did well again in 2023, and I want to continue to focus on that in 24, utilizing the technology wisely. There's a lot of technology. We built some of our own technology between the market rover and some indicators and some other proprietary ways of looking at the world through an economic and financial lens. But there is a lot of technology out there that can help us both from an efficiency perspective, but also from a risk management perspective. So I think we want to continue to explore and leverage technology tools, maybe even some automation of strategies or rebalancing. This could include utilizing various apps, robo-advisors. I'm not here to promote them because I think there's a lot of issues with them, but just technology, be open to them. There's a new technological financial platform or fintech thing hitting the market probably every half an hour. I only come across a couple new things a month myself that seems to fit our interests, but just be open-minded to that because it can help us risk management, which of course is a previous point, but also of course just be more efficient. The last point that I want to focus on really brings us to some of our plans here as well as the Steady Trader at Blue Marlin Advisors. And I really built these two companies to make sure that we have a way to collaborate with our clients and provide a platform for them to collaborate among each other and really build a network of trust, social network of trust with like-minded people being interested in the market with the realistic approaches for trading and investing, be that professional investors like investment advisors, institutional investors like hedge funds and pension funds, or of course, people at home, as I said. So I want to resolve to expand our professional network once again within the investment community. Again, we built our platform here at the Steady Trader and Blue Marlin Advisors to do that. I want to engage in discussions, attend conferences, and seek collaboration with other professionals to gain diverse perspectives and insights. One of the reasons we have chat rooms like our Inner Circle chat room or Credit Spread Authority chat room or specific chat rooms for specific indicators we use. And I would really encourage everyone to do that as well, to build a network of people that you can trust and you enjoy being around investing. And one thing that I would say would not qualify for that is joining a random public stream of, I'm going to say basically just stock market diarrhea in the sense of just people hating or being all emotional about things. Those are not going to help. Typically, a paywall keeps the crazy stuff out and focuses the discussions in a more realistic manner. So that's something that we definitely want to do again 2024. The last point on that is really finding a partner that you can work with. And this is, I'm speaking to the audience here. I always talk about it here, and this is why we built Blue Marlin Advisors, our investment advisory firm, is to give people access to partner with someone. Remember, you have a newsletter subscription, a trade alert subscription, like we have stuff at the Steady Trader. That's great. That's information. But what I would really encourage everyone to do is find a partner. Find, again, whether that's someone you collaborate with, that you find in some sort of a membership behind a paywall or something, or preferably it's literally an investment advisor. And I say, I'm using the word investment, not financial. There is a difference there. Someone who really is good at investing. Investment advisor who knows your story, knows specifically what you're looking for every month, maybe every week even, and someone you can talk to and exchange ideas. Because having research is one thing. That's what we built the Study Trader for. Being able to personalize that into, does it fit for you? Because not every trade idea gets sent out through behind a paywall might be relevant to you. What about sizing, right? Talking about the markets, talking about specific ideas that you come across is really important. So finding an investment partner is something that I would encourage everyone to have on your list of to-dos and your New Year's resolutions as an investor and trader in 2024, particularly if you are a self-directed investor at home. If you're an institutional investor, investment advisor, you obviously have your own team of people there. That's something that I'd like to throw in there as well. With that, again, a very happy New Year 2024. We're going to continue to build out the Steady Wealth podcast this year with a lot more guests. We've got a lineup of guests that really spans the entire universe of investing. And we're going to slowly roll those out over the coming quarters with interviews on a weekly basis here at the Steady Wealth podcast. Thanks so much for joining and listening, and happy 2024.